In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
It's Friday, you're watching FreightWaves Now, and I'm your host, Anthony Smith. We have an amazing lineup for you this week. We have Donny Gilbert talking to the brokers. I'm stepping in, doing a little bit of a shipper econ update, but first, a word from Zach Strickland on a carrier update sponsored by Powerfleet. Stay tuned.
Hey everyone, and welcome to your carrier update sponsored by Powerfleet. So, tender rejection rates breaking through yet another barrier today at 11.32%. So, capacity is still tightening as we approach the holiday. This is the highest level, if you follow this horizontal line here, the highest level since January 8th of this year. So, that's a big news because this fall through was coming off an all-time high, like in 2018. So we were plummeting at this point, but over here, we're actually driving this rate all the way back up. So it's almost like a signal that the market may be turning in the long run, but don't get too excited because January is on the horizon. So this time of year, carriers are trying to keep their drivers within a certain boundary or a certain range so they can get to home time, etc. So I think it would be a good exercise to walk through and see where the shorter haul freight is. Where do you want to source that? So this is going to be your single day moves between about 100 miles and about 450 miles. Anything that a carrier can easily accomplish in a single day or a 24-hour period, no problem. Behind me, I have the short haul outbound tender volume map, along with the short haul outbound tender rejections. So anything in dark blue is going to have an increasing short haul outbound tender rejection rate. Anything that's tall is going to have increasing or larger amounts of short haul volumes. These are going to be the loads that move between 100 and 250 miles in general. So about a half day's move. Should have plenty of time to go find another load to pick up in that time. So the average lead time right now in the country is about 2.6 days. So a lot of this freight might be set up for next week, but a lot of it is probably still sitting in that single day range. The Columbus market, for instance, out here in the Midwest, if you pay attention to the Midwest, a lot of shorter haul freight available, but over here on the East Coast, anything up in the New England area shouldn't be a big surprise there for this time of year to see increasing short haul volumes, as well as short haul tender rejection rates. The Harrisburg market, of course, blowing up as usual. You look over here at the heat map list, Harrisburg's number 1, Atlanta, Allentown, Columbus, Indianapolis, very Midwest heavy in terms of overall short haul volume moves. So if you are looking for those short haul moves that are 100 to 250 miles, go to those markets today. This is the mid-haul market, so anything between 250 to 450 miles. That's what I have on the map right here. So these dark blues, again, increasing mid-haul rejection rates for mid-haul, and anything taller, that's where the larger mid-haul volumes are going to be. So again, we've shifted a little bit into the Midwest corridor. That's where you're going to see the increasing amounts of mid-haul volumes. Of course, out here in the West, not as prevalent because you have a lot of longer haul freight, but here between Denver and Salt Lake City and the mountain regions, you're going to have some increasing mid-haul rejection rate. So if you are traveling through that area, make sure to check that out if you do need another load. But the Midwest is really where all the mid-haul volumes are at this point in time. Columbus, pretty good example of a lot of volumes, but tender rejection rates not necessarily there. So you may not have as much luck on the spot market in Columbus as you would for, say, in St. Louis, Missouri. So let's break out St. Louis, Missouri, which is one of the best markets you could go to for that short haul volume freight. It's going to be, a lot of loads going to Chicago and Columbus. These are the biggest lanes in that area. So St. Louis, a really good spot if you're looking for any short haul. Short haul rejection rates up to around 17% or 9%, I should say, but reefer rejection rates also up in that 17% range. So reefer rejections in this area, if you are looking for reefer loads particularly, check out the St. Louis market. So wrapping this up across the country, If you look across here, it's still a lot of heavy weighted rejection index values across the Midwest and into the Northeast. And so if you are looking for loads in those areas, go ahead and check the spot market. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Donny Gilbert here, talking about what's going on in the brokerage world. Kind of want to start out here looking at our power pricing index versus our outbound tender rejection rates. Yesterday, we talked about how the power pricing had jumped up to a 40, which is getting, a stronger indication that carriers have more control on what's going on over the rates right now. It's currently still on the side of the shippers, but it's been growing stronger and stronger for carriers having more of an input on what's going on in the world of the rates. So right now, as we see, comparing this, we see our outbound tender rejection rates right here have also shot up. And this is, of course, the spot market rates picking up throughout. This is an average going across the U.S. right now for our outbound tender rejection rates. So we have our power pricing index picking up as outbound tender rejection rates are also picking up. So this is what we expect to see here right before the holidays. And as, of course, we approach Christmas here, which is now on a Wednesday, which is going to be kind of a difficult task to kind of get into, because right now, today being Friday, if a driver picks up a long haul load right now, he's probably going to do that load on Monday. And if he's headed out away from his house, he's not going to be able to get back home before Christmas. So right now, if you're going to bid a long haul load, you better have some price on that, because right now they're going to be out over the Christmas holidays and your carrier rates can be very, very expensive. But look at these tender rejection rates here. We have for our short haul loads, they are currently at 10.17%. Mid haul loads are at 13.5%. Tweener haul is at 14.90 and long haul is at 11.28. And we expect these to go up, especially the tweener haul and the long haul loads, because the drivers that are going to be out over these are going to be out, of course, over the Christmas holidays. Now, if you're getting a driver home, then of course you're going to find a very good rate, find those long hauls and move those drivers home. But the best area right now to be booking your loads in is look for the mid haul and the short haul loads. When the drivers get home or get to their deliveries on Monday, they're probably going to deliver and then probably go home for the holidays. So we're going to see capacity tighten up on Monday. Moving next year, I kind of want to jump in and look at the Harrisburg market. This is the great market right now that we see tender rejection rates have jumped up to the highest levels that we've seen since really the beginning of the year or the retail season of 2018. And we see outbound tender volumes are picking up, and we have both reefer and dry van tender rejection rates picking up. Looking at the actual head haul indexes, you actually see where reefer head haul index is actually gone down to a negative. But with the holiday season coming up, these actual tender rejection rates have actually pushed up. So we're still seeing a price increase on the spot market in the Harrisburg market for both dry van and reefer. And again, that's what we expect to see throughout the holiday. So come Monday, when these drivers start to go home, that's when we'll really see spot market rates start to pick up in all markets across the U.S. Anytime after that, the drivers can be out over the holidays, and you're going to get a very high rate from your carriers.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
This is your shipper update. I'm Anthony Smith, and behind me, we're going to talk about housing starts. It's been way too long since we start talking about housing starts and the housing construction industry overall, so we're going to have a little bit of a coverage of it today. Behind me, I have housing starts throughout the entire U.S., and so what we saw in the latest month's data is that there was a solid 3.2% gain for overall housing starts. Now, the big takeaway here is that this is over 13% above the same month 1 year ago level. Now, this is something of note because in the start of the year, we saw that housing starts were really lagging to really maintain where consumer demand was. And so that's one of the things that we're going to be keeping an eye on going into 2020. Now, the next thing I have up here for you is the big strength for housing starts. The big strength from housing starts was single family housing starts, and that's going to make up a big bulk of overall housing starts. And so that's a really big segment to keep in mind of. Now, when we think of housing starts and we think of construction activity, a lot of the time we're going to be thinking about flatbed activity. And so the volumes don't just end there, right? So there's a downstream effect. When we see housing construction starting to come online, we see that consumers start buying things. If they're feeling confident about buying a home, they're going to be feeling confident about buying things for that home. So that's one of the things we're going to jump into here shortly. But when we're looking at single family housing starts, the biggest bulk of all the construction activity is going to come from the South and the West regions. And these two regions performed. Now, as I mentioned, overall housing starts were about 13% above the year ago level from last month. But this does not mean that this is the entire year overall. We got off to a really slow start. And what we're going to expect is to end the year overall just above or right around the same levels from last year. Now, this is something to note, but going into 2020, we expect to see a lot of demand, and that demand is going to come from those increasing permit those increasing permit rates. And so when we're looking at permits, that's really an indication of future activity and future building activity. And so this is something that's going to really drive momentum going into the new year. The other thing that's really going to be driving momentum is that there's a demand for these homes. There is a huge supply side issue when we're looking at overall housing construction. Now, the supply side issue comes from available lots and available skilled labor to help build these homes and start on these homes. And so that's going to be an ongoing concern when we're going into the new year. This is something that's really going to help keep demand tight and high, but it's also something that can be a major headwind when we're looking at housing and construction going into 2020. Now, as I mentioned earlier, there are going to be downstream effects for housing and starts and builder sentiment and consumer confidence, right? So especially as we're looking at year-end conditions. And so one of the things I have up here is retail sales for furniture products. And we're looking at retail sales for furniture products. That's one of the last few things that people still like to go to the store and purchase instead of doing all their online shopping for. So as I mentioned, this is really going to be a driver of consumer confidence, consumer conditions, and really what's going on in the economy. And so I'm confident about housing and construction demand staying strong going into the new year. And that's going to do it for your Shipper Econ Update. And also that's going to do it for this episode of FreightWaves Now. Thanks so much for tuning in. Now, the fun doesn't stop here. We're always posting content, and we're going to be posting content all throughout the weekend. So if you missed us, feel free to check us out on all your favorite social media platforms. We're also just launched FreightWaves TV, which is available on Apple TV and all your favorite streaming platforms as well. So be sure to check us out, and we'll be sure to keep you up to date here at FreightWaves Now.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.